Christian Zuza here, one of the partners at Peak Wealth Management, just running through a few key topics about financial advice for business owners. Unfortunately, today, not in the head office, but like many Australians, we are stuck at home. So I'm going to run through this presentation. There will be a full link to the article I've written up about this. So feel free to ask questions away, but here we go. So look, from our point of view, working with busy, aspirational people is rewarding. No one really appreciates and trusts us and the peace of mind that we offer our clients more so than busy people. So we took a little bit of a step back and we had a look at our client list, and a common characteristic among that is very busy with work, busy with family, or usually both, and both have financial goals. So from our point of view, we thought we'll ask the question, are you someone that's time poor but wants to get ahead financially? And the vast majority of our clientele are busy on either the work or family front and have personal and financial goals in mind. With that being said, a lot of these clients also own a business. I think that's quite natural when we take a step back at those characteristics as well. But if this is you, let's deep dive into key advice that might suit you, the business owner that wants greater financial freedom and return. So we check in on and give our 2 cents of guidance on common goals of a business owner, characteristics that shouldn't be missed, easy mistakes that can cost you, some of our expert tips, and why you need a financial advisor. Starting with the first one, which is common goals of a business owner. So we've found that the 5 most common goals and reasons for starting a journey of self-employment are self-determination, okay? That could be just a drive or a goal, whether it's out of desperation. What we've seen during 2020, a lot of people kicked off a business because they had to, because there wasn't a whole heap of employment going around. That was one example. Number 2, for wealth opportunities, people seeing an opportunity they can take advantage of from their skill set, their knowledge, their networks, and thinking they can do things better than what's available. Third on that list was lifestyle flexibility. People wanting to not be stuck in a 9 to 5, or which when chatting to a lot of the people and a lot of the business owners, it's usually a 6 a.m. to 6 a.m. kind of 24 hours on the clock kind of thing. But it was about having that flexibility of how things are done. Another one that came up quite commonly was family legacy, wanting to be able to create something to pass down to the family. And that can be as a business or as wealth, or setting up the family in a specific way, whether that be due to setting up with an education fund, setting up with the first home deposit, just to give their children and their family that leg up. Number 5 was actually self-development. And it was about just getting out of that comfort zone of having that regular income and trying to do it themselves. Okay. So next topic we've covered off on is business owners need to consider. And we've covered off quite a few points here. But we're going to start with, first and foremost, the basic one, cash flow. Look, this needs to be structured and preferably automated, measured and monitored closely. Whether it's personal or business, this is the area where both success and stress comes from in personal and business life. Chatting to accountants, we've heard the same thing. Chatting to families, same thing. Okay, it's a structure of affairs. And this is where we need to look at your trusted team of professionals, your accountants, your advisors, lawyers, brokers. It's important to set things up with the end in mind, because that can be the difference between so many outcomes. A few examples are tax bills, protection from creditors, and where assets will go if you pass away, and even things like insurance costs. Third, more of a topical one at the moment, superannuation. Look, it's the most tax-effective environment we have access to in Australia. So yes, it comes with some restrictions, but it's also protected from creditors and a great way to save for the future and diversify away from the business. We see 2 things quite regularly. Business owners either having no super at all, or others tend to explore purchasing their workplace within their self-managed super fund space. It's all about having something locked away for the future. None of us know what our business will look like in 5, 10, let alone 20 years. We don't know what that environment's going to look like. So it makes sense to have a few things diversified across different areas of assets. Fourth on this list, tax effective strategies. So accountants are crucial in this conversation piece, and coupled with a financial advisor, you can be sure to get the best tax outcome available depending on what your goals are. Fifth, insurances from a personal or family perspective. So what if something happened to you or your partner? Would your personal life be able to survive financially without you? And the same thing goes for your business. With business owners, these two things are typically very, very linked. If the business is not performing, the family and financial life of that family goals will tend to suffer as well. So again, if something was to happen to you, sickness, injury, something serious, have a think. If something serious would strongly impact this, might be worth reviewing an insurance plan. Another one, estate planning and a succession plan. So this ties in with having the end in mind. Asset intent is very important, and having a plan in place from before an event will make it easier for all involved. That can be things like selling the business, or wanting to bring on another staff member, or planning for the worst. If something really horrible happened to yourself, your partner, what would happen to the business? How would it get passed along? Last one is keep on top of tax regulation and changes. So make sure you have a team of proactive professionals that adjust quickly to changes and ensure you're best positioned for success over the short, medium, and long term. Some of our expert tips. Build an emergency cash fund. Keep 3 to 6 months. There's no general rule of thumb here. 3 to 6 months tends to typically be that safety comfort zone. So we don't have to look too far back to see why is it important for some liquidity and things that are unexpected. 2020 has been a really good example of why we need to keep access to some cash. Ultimately, it's also a good strategy for wealth building, because in times like we've seen in 2020 with great financial crashes, even further behind those years, they're really, really good opportunities to purchase really good growth style assets at a discount. Okay. Another one is to manage personal credit. So try not to tie all your debt back to your own home. This ties back to a few points above in terms of structuring, intent, and risk mitigation. It helps having a lending specialist that can help based on your goals. Save for retirement and for your personal family goals. Short term, I can definitely understand putting everything into the business. Long term, it's a really high risk plan and can be out of your control in some instances. We've seen various examples where industries change, regulation comes about, a range of different areas that might change the valuation of your business in 10, 20, 30 years' time. So make sure your hard work helps and you achieve all your personal and family goals as well. So it's easy to get caught up with tunnel vision for the business, but what it's important with the business is to use it to achieve your goals, not just to hope that it will sell for a lot in the year that you want to retire. We've got to plan ahead a little bit better than that. Another one, especially with your investments outside of the business, invest in line with your goals and your risk tolerance. So when you do need to diversify, we suggest investing in quality assets over the long term. Just make sure it's appropriate for your own plan and not everyone else's. Might not match someone's stock tip at a pub or at a barbecue. Just make sure you get a plan that makes sense for yourself and your family. And a key thing here is get professional help in areas that you don't know or don't have time to focus on, so that you can spend more time with your business, more time with your staff, more time growing that nest egg for the future. Some easy mistakes we've seen over the years. No clear separation between your business stuff and your personal affairs. Not having access to emergency funds, and we saw the impact of that through COVID massively. Improper debt structures and plans for finance. Like I mentioned above, tying in the family home to absolutely every bit of business growth is a high risk strategy. If we can avoid it, it'd be fantastic too. We need to get a clear understanding of fixed and variable costs, and accountants are very good at explaining this conversation with yourself, just so we know what our targets need to be going forward. And touching on that comment about targets, not having a clear targets and a plan, whether it's your business or your personal, goals, targets, and measuring lead to a higher chance of success. Another one, like Gary Packer said back in the day, we want to make sure we're utilizing all effective tax minimization plans. And that comes legally, of course, but look, tipping the tax man any more than we need to can really hurt your wealth over the long term. And again, this ties back to getting professional help just so that you can make educated decisions for the long term. Another easy mistake to ignore that is easy to make is ignoring that cost rise over time without reviewing your business pricing. It's a good conversation again with your accountant or your business advisor. So I hope you've enjoyed some of these tips for financial planning for business owners. We hope that you enjoyed the article below, which goes into a lot more detail than this video. Feel free to shoot us any comments, messages, or reach out if you want any help from a financial planning point of view, or for us to put you in touch with some of our trusted professionals in our network. Cheers.